Doug Hedley, one ETF that you hold in your quantitative portfolio over at Paritas is the IEF. Now, this is the iShares 7 to 10-year Treasury Bond ETF. Usually people talk about the TLT, which is 20 plus years, but you hold the IEF. Why is that?
Well, it has the right targeted maturity range for us. You can look at some of the shorter term and obviously go out to TLT, but I think you run into some interest rate risk should we get a backup in rates.
And you also own the Utility Select Sector SPDR. Utilities had a great first half of 2016. What makes you think they can keep it up in the second half?
Well, when we look at volatility within our model, we're going to wait and see when that spikes. We're not going to look at it just because the position is up substantially. If that changes, however, if we see a lot of volatility in XLU before the end of the month, you could actually see that allocation go down.
And consumer staples, another very hot sector in the first half of 2016.
Right.
And this also has a fairly sizable weighting in your portfolio. Tell me about this one.
Well, consumer staples, much like XLU, are very defensive in nature. And we've had volatility come down in the equity markets, but currently XLU and XLP have much better risk profiles than some of the other sectors in the market.
And then finally, the Vanguard REIT ETF. A lot of people are worried that if and when the Fed finally raises rates, this is going to hurt the REITs pretty badly. We saw that during the taper tantrum not too long ago. So why do you want to own the VNQ?
Well, VNQ right now represents a very low correlated asset in the portfolio, which we like to have. In fact, if everything in your portfolio is going up at the same time, you're probably not very well diversified. So if we see a pickup in volatility, which we haven't in the REITs market, we will maintain that position going forward.
All right, well, thanks a lot, Doug.
Thanks for having me.
And thank you for watching The Street.